All right, everyone, that's a close on Q1 trading during the regular trading hours. I have some commentary for you based on what we've seen and how we're set up for the kickoff to Q2 tomorrow, April Fool's Day. And I'll tell you what, the trading will not be any sort of joke. Don't forget about Liberation Day, Trump's Liberation Day coming up on April the 2nd, and we need to see what exactly is coming up for us then. And I'll talk about how the market potentially react leading up to that point in time and what could happen following it. I've talked a lot about that in my previous video. I just want to talk about how mostly what happened today in the market and how it sets us up for the next part, the next leg that we have as we're approaching Q2, and just a reminder of some catalysts that we have out there. By the way, if you want to see more of my analyses, see my trades, see my technicals, you can do so using the link in the description. For the Discord, code word cash when you sign up using the earners tier. It's going to save you 50% off your first month. You'll find me and the other panel experts over there as well, sharing our ideas, our trades, our technicals, plus the bread bots over there as well, plus AI tools, plus advanced charting tools, thousands of members, probably the best community that I've ever had the pleasure of being a part of. And you guys can get it all for a little bit cheaper using that code word cash when you sign up. I'll tell you about coursework later on in this video. In the meantime, let's get into the charts on this. All right, so kicking things off with SPY, let's go ahead and take a look at it. For SPY, you can see with the retracement levels that I have here, this is actually Fibonacci extension values, sold down through the 38.2, almost to the 50, in a rapid recovery, and we had a bit of volume down here towards the bottom. Now, I'll tell you, on the good side of things, that could be a signal that this could be a temporary bottom for us, that some of that pressure has already come off. But I gotta say, with the catalyst that we have coming up, with the uncertainty of what exactly comes with Liberation Day, I think that this is more about getting a final strong positioning, if you will, as strong as we're going to get it from the end of Q1 as we go into Q2. So I think tomorrow could still bring with it any amount of volatility, and this could definitely be a bottom for us where we actually see a significant bounce from here. The volume's good, the candle's good, getting back up over 38.2 is good. We had the 23.6 just up above, which he didn't quite cross up above that, but that's okay. Overall, it was a darn good day in the markets, given where we started, where we sold down to, and where we were able to close. So when we look at the Qs, there we go. The Qs got even closer down to that 50% Fibonacci extension level off the most recent sell down and then spike back up and then retracing one more time. So how to go on that dip almost down to the 50, back up above the 38.2, and it closed within 2 cents of the previous close. So closing pretty much dead even with itself from Friday into Monday. Once again, that volume, that's good volume to see that sort of push upward. I don't know that it would be that volume climax that we're looking for that push back up around. Now, mind you, the market, if we're looking at a certainty that the market's going to sell leading up to Liberation Day, well, then this could be one of those moments that contrarian would be the better perspective. I will tell you that I did hedge my portfolio. That trade is available over at the Discord. Links in the description, code word cash when you sign up. And I talked this morning about getting back above the 200-day, which we definitely got that rejection on earlier this month, and we want to be watchful to get back up on top of that. Just haven't quite gotten there yet. The potential is still there, my friends. We want to keep our eyes on that potential that we do happen to get back up there. It is possible that this happens to be one of those times that it makes a lot of sense to buy the news instead of sell the news. I think we've already sold off on it, and we have to wait and see. We have to watch and see what the market does, how the market reacts, and maybe we find out that the tariffs aren't as bad as we thought, and we start heading northward anyway. So we want to be ready for that potentiality to happen. Like I said, I did hedge my portfolio already with some TMF, with some SQQQ, and like I said, those trades available over at the Discord. Let's move over to IWM, because IWM sold down to the 38.2 before recovering a bit, stuck in between the 23.6 and the 38.2 in order to close. Once again, volume decent, not quite as much conviction as what we saw with SPY and with QQQ. I gotta say, NVIDIA probably helped us out a little bit. In my morning video, I talked about support areas, and check out, we stayed within the support area, ripped up to almost 110, then sold back down to 108. In the post-market, we're back down below 108. So for NVIDIA, I talked about long-term potential. This is one of my top stocks that I still have out there. And I think depending on what we see over the next 1 to 2 years, we could even see maybe a 2x potential out of this. At least from right now, I still think that we have that shot at about a 60% upside. I think that's worth paying attention to when we look at NVIDIA. Now let's look at Bitcoin. Look at this, 2 indecisive candles in a row. I'll tell you what, talk about not being able to decide what sort of risk environment that we're in. The volume, not all that surprising, not all that substantial, a little bit higher than we had the previous days, but certainly nothing like we saw during this last sell-off where we went way up above average. this is still kind of marking time, if you will, until we find out what sort of risk environment that we're in. Hopefully, we get some news on that one sometime soon, because honestly, I think it's that next big news catalyst that we see news about. For instance, the U.S. government being able to buy that 1 million Bitcoin, causing a lot of buying pressure to happen. And honestly, in a thinly traded market, if that's where we're at right now with Bitcoin, that can lead to a lot of upside volatility. So we want to be watchful for that. XRP, there we go. Click on this. Right around 210 right now, still in that support type area. Pretty much getting out of that head and shoulders fear part of this right now, especially as this right shoulder continues to extend out this way. But check out the Bollinger Bands. Man, those things are getting narrow. Look what happened the last time that we had the narrowing of those Bollinger Bands. It is possible that something big happens for us sometime soon. So guys, I want to talk about some of the catalysts that we have coming up, and especially with TLT. And I showed the monthly chart on this before with that rising RSI, that rising momentum. Still bearish. Just to be clear, still bearish down below the for the 200 month, the 50 month, the 20 month, you name it. Getting on top of that 20 month is really going to help us out. If the market does go risk off, I still think that we're going to have some outperformance happening from TLT and TMF, of course, being the triple leverage version of it. That's something I'm looking for. Guys, we have some catalysts coming up besides the Liberation Day catalyst on the 2nd of April. Tomorrow, we have jolts coming out in ISM manufacturing. So watch for around the 8:30 hour, 10 o'clock hour. Those are going to be huge for us in the markets. And then on Friday, we also have non-farm payrolls and unemployment rate. I talked about those in length in my other videos. So if you look at my past few videos, you can see those. Basically, there's 4 pillars that I keep talking about that prop up the markets. One is high GDP. That's currently in question. Thank you, Atlanta Fed GDP now. And then also inflation with tariffs. That is something that is also in question because we need subdued inflation in order to prop up the market. So high GDP, low inflation, easy monetary policy, which the Fed is still trying to hold firm on where they're at right now. They don't want to give us that easy monetary policy. So that's tough to really make those markets go boom and zoom and, to the moon, boom, zoom to the moon. I don't know if I can say that 3 times fast. And then the last thing is that labor market side of things, that as the labor market starts to show that weakness, we know that we've seen that final part really start hitting where companies start to go into preservation mode, if you will, and that can lead to some further sells and everything. So the labor market news has a lot to do with it. Trump tariffs have a lot to do in terms of inflation for what exactly we could see. And for the inflation reports that we have, CPI and PPI that come out the next week or two after this week follows. So as they come out, then we start to wonder, okay, well, will we see more inflation there? Will we see companies protect themselves from an inflationary standpoint for the tariffs? Did they start already raising prices to preserve some of that pricing power to preserve their margins? We're going to have to watch and see. But that's why the market sold off to where it is right now, is that all those things are in question, plus geopolitical tensions on top of it. Will we see some fallout happening from that in the days the day of or the days following Trump's Liberation Day coming up? Guys, you can let me know what you think down in the comments. You can join me over at the Discord along with the other panel experts. We'd love to have you over there as part of the community, especially if you're striving for that financial freedom and you would like some help doing it, or you just want to be a member of a top-notch community. Make sure when you sign up, you use code word CASH. Join that earners tier. You're going to access to the expert channels that are over there and also all the tools and resources that it has to offer. And if you guys want to learn more about technical analysis, learn about trading using technicals, especially with the bread recipe, which is one that I personally use. Just used it today for some day trading. Worked out very well for me, and I can't wait to do some more of it. And also I use options to do a lot of my day trading. There's also an options course for you. Link for that through Stockmo Academy down in the description. Use code word CASH when you, wrong code word. Use code word doctor when you sign up for the courses. Use code word CASH when you sign up for the Discord. Guys, it's going to save you a ton of cash. It also helps out the channel, keeps me coming on back to YouTube, sharing what I know with all of you. So you're supporting yourself in the process and keeping me coming back to YouTube. Help support me and my family, and I know that we appreciate it very much. I appreciate you just for watching. Subscribe if you want to see more of what I have. Make sure that notification bell is rang. Guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.